Financial Argument. Follow us on YouTube.
Means something. Well, anyways, it means that the Fed has blinked. It means that stock markets are going to go ever higher, and probably precious metals as well. Well, we'll find out more about that from John Rubino at dollarcollapse.com. Don't forget, email kl@kerrylutz.com. John, good morning.
Morning, Kerry. Yeah, interest rate normalization is turning out to be the big story of last week and probably for some months going forward. Basically, the central banks of the world have cut interest rates to extraordinarily low levels, just historically way out of the norm. And they've increased their balance sheets, which is basically a proxy for how much money they've pumped into the system, to also unheard of levels. And that's keeping us from collapsing into a 1930s style depression, but it's also creating a lot of pathologies. You know, debt continues to soar pretty much everywhere, and insurance companies can't function with low interest rates, and pension funds are going bust, and savers can't generate any kind of income off bank CDs or bond funds, or, you know, the places where they used to put their money that they wanted to be safe. So they're being forced out on the risk spectrum into junk bonds and equities. And so it's messing up a lot of different sectors of society. And because of that, a lot of the big central banks are coming under pressure to raise interest rates back to normal levels. You know, they want to normalize monetary policy now that the crisis that they addressed with experimental monetary policy is over. But only the Fed has acted so far. The U.S. Fed has raised the Fed funds rate by about 100 basis points in the last year. And most of the other central banks are still kind of dithering because they're afraid their economies will collapse if interest rates go up. But at the same time, they feel a lot of pressure to raise interest rates because their economies might collapse if interest rates don't go up. So the central banks are kind of stuck here. And last week, Janet Yellen made a speech in which she said that, or she implied that interest rates would be going up a lot more slowly than people expected in the U.S. because the economy is slowing down. Which is interesting but not surprising because we're 7 or 8 years into a recovery, and recoveries usually only last about 6 years before you get another recession. So we're overdue for a slowdown. So just, you know, based on normal business cycle dynamics, the economy ought to be slowing down, and it seems to be. So she came out and said, well, maybe we won't raise interest rates very much going forward, and maybe our target interest rate is going to be much lower than historically normal because inflation is lower than it has been in the past. So the world's stock markets and bond markets like that. You know, it implied that today's world will continue in a monetary sense for as far as the eye can see. Interest rates are going to stay really low, and central banks are going to continue to either hold big balances, which means they're going to leave the money that they pumped into the economy out there, or they're going to continue to buy bonds like Japan is doing. And that's just a very expansionary, inflationary backdrop for the financial markets, and equities like that. So people started buying stocks again last week, and they're, you know, more or less continuing to do it today. The U.S. market is up slightly. But of course, as I said, that means all the pathologies that we're building up, all the imbalances that are being created are going to continue to expand. You know, the U.S. debt level is going to soar, and all these unfunded liabilities are going to continue to increase at an accelerating rate in the pension funds in the private sector and the state and local government and the U.S. government level. You know, all the stuff that we owe but that doesn't show up in the official debt statistics will continue to expand, with one big difference from the immediate past, and that this balance sheet accounting issue is going to turn into a cash flow issue because we baby boomers are starting to retire now, which means we're going to start collecting all the money that we're due for healthcare and for retirement. And that means that these unfunded liabilities, which actually didn't have a cash flow impact in the past, are now suddenly going to cost us actual cash going forward. So what would happen if we raised interest rates to normal levels is that the interest cost that everybody is carrying will go way up at the same time that government spending on pensions and healthcare will go way up. And so you get this double whammy that will just explode public sector budgets out there and a lot of private sector budgets as people and corporations with variable rate debt and short-term debt that has to be rolled over pay higher and higher interest rates. And see, that's the problem with it is interest rate normalization is that it costs us a lot of money if interest rates go up because we're all so heavily leveraged. And that alone might blow up the global financial system. So nobody knows what to do now. We're in a box where there's no fix. And we're seeing these guys flail around and say one thing one month and one thing the next month. And nobody can really trust what public policy is going to morph into going forward because there is no fix. Nothing we do will work. Therefore, you get these kind of schizophrenic central bankers out there saying one thing to one group at one time and one thing to another group at another time, and policy just kind of flounders. So I think the end game here is probably when the markets finally figure out that the central banks have no idea what they're doing and that we've got government deficits expanding as far as the eye can see and increasing money supplies around the world in national currencies, and a lot of technological disruption. Therefore, the system is going to fail at some point, or it's going to become more and more variable, and the amplitude of the booms and busts will get bigger and bigger, and you won't want to be in there, and people will start pulling their money out of financial assets and putting it in real assets. That's the end game. We don't know when it's going to happen, but it's coming, and we're seeing signs now of absolute incompetence on the part of central banks and absolute cluelessness. They just don't know what to do. And eventually that's going to affect the mindset of the markets.
Interesting. Well, yeah, we've been predicting for a while that the economy was going to turn down and the Fed was going to have to pull back on their so-called normalization. And here we are, right? It's happening before your very eyes. Well, yeah, it's kind of a repeating process where you get these, at the beginning of each quarter, you get these really favorable expectations for growth, 3 or 4% growth in the next quarter. And then over time, the numbers come out weaker and weaker and weaker. And the GDP estimates, for instance, I'm looking at the screen for GDP now from the Atlanta Fed right now. And they started out thinking that this quarter would see an annualized growth rate of about 4.25%, which would be great. That's a booming economy. It's impossible, but it'd be great. Yeah, but in the last month, they've moved that down to 2.4%, right? Which is much less great, but still acceptable. But the numbers are still coming out unfavorably. Each new economic report sends GDP forecasts for the quarter in which those numbers come out further and further down. So we'll probably end up somewhere in the ones again, just as we did last quarter. And that's just not fast enough to stop the debt as a percent of GDP from growing. And as long as debt as a percentage of GDP continues to grow, that means we're digging ourselves further and further in a hole from which we already can't get out, because debt has to be paid off, which means we're limiting our flexibility in the future as we increase the cost of the debt that we're taking on going forward by taking on more and more debt. So it gets harder and harder to reach escape velocity growth, even with incredibly low interest rates and huge amounts of money having been dumped in the system by various central banks. And if we can't grow at a really dramatic rate right now, then it's not clear that we'll ever be able to grow fast enough to get ourselves out of the box that we're in. I mean, it's clear that we can't do that. It's becoming less and less clear to the guys in charge who actually thought we could get out of this. But, people on the sound money side of the spectrum never expected the U.S. and the rest of the developed world to be able to grow its way out of all the debt that we took on in the last 30, 40 years. And it's very obvious that we can't, unless the central banks of the world reverse course and decide to just flat out inflate away all of this debt by targeting a 4 or 5% inflation rate and cutting interest rates to negative levels across the board all over the world and basically buying assets of every kind. That's probably what's going to happen in the next recession, because the next recession will be terrifying. It'll hit with interest rates already pretty low, so the Fed doesn't have a lot of traditional ammo with which to fight a downturn, and the amount of leverage in the world being absolutely astronomical. The U.S.
has doubled its national debt at the federal government level twice in the last two presidential administrations. And in the current one, we're on track to raise it by maybe 50% from here. That's a trajectory that you can't maintain. Yet if we get off that treadmill, in other words, if we stop borrowing money at the federal government level, the system collapses because it needs all that new cash coming in.
Yeah,
so one way or another, we blow up. Just a question of timing.
The liquidity will go down to zero. There'll be no money. They'll have a massive, blow up in all the markets. And that's what we have to look forward to. But, I think partly the rise of cryptocurrencies is a reaction to this, an understanding that the current system really is unsustainable, John, and that something has to be done. Unfortunately, they don't know what to do, so they go for, what in theory could be very positive, but in reality is not going to play out that way.
Well, cryptocurrencies are a good example of a technology whose time has come. People have basically figured out how to have a completely virtual currency that operates online and bypasses the governments of the world. And that is, it's several things. One is that it's just an example of a new technology that's very cool and fun to watch. It's also a force for deflation because as the value of these cryptocurrencies go up, money going up in value is deflation, basically.
Yeah.
And you're seeing over time, really erratically, the major cryptocurrencies get more and more valuable, although they've had a huge correction just lately, but that's coming after an astounding run, a dot-com bubble level increase in price. And to the extent that cryptocurrencies account for more and more commerce in the world, that's very deflationary because the price of stuff, when translated into Bitcoin, is going down. So that's a risk for a highly leveraged global economy. And it's also a challenge for the fiat currencies of the world, because if you can transact in Bitcoin, then you need fewer and fewer dollars going forward. And if the demand for dollars goes down, then the value, other things being equal, of dollars will go down. And that's a bad thing for the guys who are trying to run a monetary policy based on dollars being perceived as valuable out there. And now cryptocurrencies is also another thing at this moment, which is a bubble. They're introducing new currencies on almost a daily basis, and those currencies are finding a market out there. They're being accepted. So we've got, what did you tell me, 10,000?
970. And that was as of last Wednesday. They probably added a few.
That is an awful lot of new competing currencies in the world. And the fact that they're being issued so continuously means that the barriers to entry in this market are pretty low, and that the demand for new currencies is still pretty high. But obviously, 1,000 cryptocurrencies aren't all going to operate successfully out there. So most of them are going to have to cease to exist. And a few of the established or more technologically advanced ones are going to succeed and become the Amazon and the Google of that market going forward. There were 1 million .com companies in 1999, and now there's a relative handful. Those are spectacularly successful companies. The same thing will happen in the cryptocurrency space. But I wouldn't even want to venture a guess about who wins in the end, because this is a techie sector here where you've got a lot of code issues that the average person doesn't understand, but that tend to differentiate these currencies. Some of them are good for one thing, some of them are good for another thing, some of them have this killer app feature, and some of them have others. And then, we can't know ahead of time who's going to win and who's going to lose. And it's not always the early mover, the established player early on that wins in bleeding edge markets. If you go back to computers, for instance, there were a lot of big name computer companies early on who aren't there anymore,
Yeah.
And the same thing will probably happen in the cryptocurrency space, where some of the names we recognize now won't be around and some new ones will rise to take their place. I wouldn't even want to venture a guess about how it all plays out, but it is a fun thing to watch from a relatively safe distance. And it has some potentially big impacts on the rest of the world. The blockchain is going to be a revolutionary technology in the world of banking, it looks like, which is good for bank customers, but bad for bankers themselves, because it means we we need far fewer of them.
Hey, also, for stock exchanges with the blockchain, every share that's traded can actually be tracked with the blockchain. It's transparent, it's open, and anybody can look and see where the shares have gone. And that makes a stock exchange have a lot more integrity. It means that there's nefarious stuff going on. You can pretty much track it down, and it's easy to do. The blockchain really is the great equalizer. Just like these Colt 45 was an equalizer that made a small person as powerful as a large person. I think the blockchain is going to make you, the individual, as powerful as a big corporation, because you'll know everything that they're doing. And, just from banking theft to wire transfers, everything else that's taking place on a mass scale, the blockchain really is the way to remedy that situation. With wire transfers, they need to verify a lot of them, especially if they're over a certain amount of money. With the blockchain, that becomes much easier to deal with without getting too technical into things that I don't even understand myself, I admit, but I do understand the concept. And, hey, this is this is what's going to make the difference. But as far as a currency that's spendable, like you can go down and buy a giant Slurpee or a big gulp soda at your local 7-Eleven if the government still allows it. It's got other problems there. I just don't know until they can attach it to like a credit card or something. It's not gonna work exactly as good as using cash or a credit card. It's just not there yet. And that's why of these 970 currencies, and I use that in quotes because a currency is supposed to be a medium of exchange. Bitcoin, you can make that argument. Ethereum, not really. Litecoin, maybe. Ripple, but those three. All the rest of them are just units of accounting. You can't go to your 7-Eleven and buy that big gulp soda and rub it into Nanny Bloomberg's face yet, right? Maybe at some point you'll go in and they'll have a terminal that will take every currency known to man. But I'm not counting on it, John.
Well, the market will work that out one way or another. Yeah. People will figure out ways to put Bitcoin on debit cards and on phone, iPay or something like that on a phone. That will work itself out. But I think there's one final question with Bitcoin, and that it might be the biggest one of all, which is the concept of cryptocurrency a force for human freedom? In other words, is it the libertarian dream currency, or is it a force for oppression? Because everything is online, which means that the NSA and the CIA can see everything we do financially. If we're just transacting in Bitcoin and saving in Bitcoin and investing in Bitcoin, our financial lives are completely transparent to the government. And obviously, that kind of power will be abused in some way at some time in the future. And the question is it a tool for total control of our lives on the part of the government? Because once they've got our finances all lined up, they can, extinguish our bank accounts if they want to. Mm-hmm. Or they can wait until we do something that's illegal with that money and then arrest us for it if they feel like it. It gives the government even more power over people than the government has now. And so it'll be interesting to see how the cryptocurrency space deals with the issue of ubiquitous surveillance. And I have no idea how that's going to play out either, but I think that's also a really important issue going forward.
Oh, absolutely. Well, it should work both ways. They can see what you're doing, but you can see what they're doing. Because if they're starting to use Bitcoin themselves, then you're going to know. But yeah, there's a lot of things to be worked out. This is emerging technology, and nothing is ever so simple, right? It's going to take time till we've got it figured out. And the market is the best way to figure those things out, not the government. But when they do these initial coin offerings, John, and they raise $100 million, and the founders of the so-called currency that's really a company in disguise walk away with 20% of 150 million, 30 million bucks, you think Wall Street is criminal? I think, cryptocurrency street is really kleptocurrency street. I think it's more criminal than Wall Street, and they'll be in on it too, and they'll be exploiting it. That's what you got to realize. So it's really, it's really not what you think it's going to be, is what I'm saying. Everybody's getting a piece of this,
Yeah, it's pretty much Wild West out there right now. So I think it's a fun thing to watch from a safe distance, but you want to be very careful about speculating in stuff like this right now.
Yeah, very. Hey, I think we got to leave it at that. Hey, we should mention the webinar we're doing. It's going to be on gold, cryptocurrencies, mining stocks. You'll be participating. It's going to be on Wednesday. If you want the link to sign up to the webinar, email me at kl@kerrylutz.com, kl@kerrylutz.com. Shoot you right over the link. It's free. It's going to be about an hour and a half, 9 p.m. Eastern Time on Wednesday, this Wednesday. So we're looking, that's the 19th, again, at 9 p.m. Eastern Time. So that's 6 p.m. Pacific Time, and you can figure out where you are in the middle there. I think it's really going to be good. We're having the guys from OM